Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend and someone who is mentoring and teaching him how to be a better stock investor, Mr. Dan Bird. How you doing, sir?
Good morning. Doing well.
So video number one, we talked about June 10th. We talked about more and more folks, really deep money, big money on Wall Street. People are telling me that your opinion from the last 3 months is what they are starting to think. Basically, June 10th validates peak inflation. Video one today, we talked about what you think happens if that happens. And the surprise, at least my surprise, was A, you started nibbling already, which is pretty cool. And two, you think S&P could hit an all-time high this year if we get validation that inflation has truly rolled over. In this video, we're going to do the reverse. We're going to say what happens if you're wrong and inflation rears its ugly head and surprises to the upside. I think the upside is anything 8.3 and above.
Right.
Because again, we have a coiled spring. We got lots of people hoping, praying that we do get that validation, but there's a chance they're wrong. And, heaven forbid we go 8.5, 8.7 on June 10th. That would not be good for the stock market, I am guessing.
No, that's true. It won't. And a lot of people are now anticipating, in fact, even, building it in that it's going to validate peak inflation.
As you are, yes.
Right, which I've been saying for 3 months, but it doesn't mean it will happen.
No.
I mean, nobody knows what's going to happen. This is my estimate, 8.0 or something below 8.3, which will validate the trend of downward inflation. And that will, set off the stock market and start buying of discretionary and technology and growth stocks again.
Yep.
And it may also cause the Fed to begin to talk about pausing their rate hikes. Now, the other thing about June 10th, by the way, that we didn't talk about last time, but June 10th, unlike the last one, June 10th will be before the Fed meeting.
Yes, exactly. And that's why I think June 10th CPI reading 8.0 to me is not the event. It's the causal or the action by the Fed, right? The CPI comes in at 8. It gives Fed the right to come out and say, we're going to give you the 50 this month, like we said. We're going to give you 50 next month, like we said, but we might pause in September.
Right. And I don't think they'll be talking about pausing yet. I think they're going to do the 50. I think they might say something like, our strategy is working. Inflation is beginning to come down slightly. So these rate hikes are beginning to have the effect we were expecting. We're going to do 50 in June, which will be the week after the CPI report. And we expect to do 50 the next time as well. I don't think they're going to come out and explicitly talk about pausing.
Yeah, they'll say something like will be data driven or data dependent or something like that.
That's right. And then as we go forward, and especially the next CPI report, if it continues to show lower numbers, then they will start to talk about pausing the rate hikes.
Yeah, so that's what the Fed's going to say. We both agree on that, but I'm willing to say that I think the market will, the market moves first.
Yeah.
And the market's going to interpret this as validation that the market will either assume that we will immediately, they're going to assume no 50 in September. Some of them will think 25 September. And some of them will think pause, but either way, they're going to read September as because everybody is saying now, you can't make money in the stock market until the Fed is your friend again, right? The Fed is not your friend. The Fed put us out, blah, 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 blah. So they're like, September's the time. September is when the Fed's going to flip. Let's get ready early. That's what they're saying. And they could be wrong.
So interesting. You should mention that because I just happen to have a chart that I created.
Of course you do.
And I think I put this in, I'm not sure.
I don't think you did. I don't remember this.
Yeah, I put it on LinkedIn. But this is one I was playing around with. I was just curious. What did the last rate hikes look like? And how did the market react to the previous rate hikes?
Ooh, good question.
So the blue line here are the previous rate hikes from the Fed. And back here in 2004, it's when they first started hiking after the dot-com crash. And we had about 3 or 4 months when the market went down. You can barely see it down here.
Okay.
But the market was declining during these rate hikes. the Fed continued to hike all the way up here.
Yeah, they got to like 5%, right?
5.3,
2.5?
it looks like 5.2, 5.3. Looks like 5.3.
Okay, all right.
All right, but
Mhm.
but after the first 3 or 4 months, the market priced it in,
Mhm.
and the market trended higher,
Okay,
even as the Fed was raising rates like this.
interesting.
In 2016, the Fed started to raise rates. So here's where the rate hikes begin.
Yeah,
3 or 4 months, market went down pretty steeply.
interesting.
And then the Fed continued to hike, and the market went up. As the market got used to it and adjusted to it, the market went up until in 2018, the Fed said, we're going to continue hiking. So see there, the hikes continued and the market
Yeah,
went down.
that's
This is when they went too far.
Is that the taper tantrum or whatever they call
Yeah,
it?
right. So this is when they went too far, and that's what typically happens with rate hikes.
Huh.
Initially, the market goes down until it adjusts for 3 or 4 months.
Yep.
Then the market goes up, and then the Fed goes too far, and the market starts to go down. And then the Fed levels off, and then they started dropping rates again.
Yeah.
All right, so where are we now? Here's where we are right now. We're about 2 months into that 3 or 4 month rate hike.
Yeah.
So even if the Fed continues to hike, even if they say, yeah, it looks like inflation is coming down, the rate of change is slowing, but we still think it's too high. And even that 4% that I showed in December, the Fed may think is too high.
Oh, they will. Yeah.
So the Fed will continue to raise, but the market typically still goes up as the Fed raises rates.
Yeah, that's back to my natural biases to go up. Yeah.
Right.
Okay.
All right. So interestingly, we're about 2 months into the first rate hike, which was March.
That's true.
Right. Guess what? June is 3 months. So, this time, 3 months. This time it was about 4 months. Market went down, then it started climbing. June will be 3 months for this one. So,
Yeah.
I think we might have another leg down if it doesn't come in below 8.3. We could have another leg down, but I think that'll be the last one. And I think the market will start to take off then.
So let me just, again, I love these discussions. So this video here is what happens if we're wrong, right? So let's just say CPI on June 10th comes in at 8.5. So it's not flat, it's up. The trend is not validated.
Right.
You think, so that comes out at 8:30 Eastern before the stock market is open. The market starts ugly and gets worse. It's an ugly day.
Right.
But so again, then the Fed comes out a week later, says, we got it. Inflation is still a problem. Here's your 50. We got another 50. And they probably would say something like, we're going to give you another 50 in September. Right there. If it goes up, I think the Fed has to keep talking tough. I think. What do you think?
Yeah, they will. And they will continue. They may continue to keep talking tough anyway. They may continue to say, we're going to keep doing, 50 basis point hikes until we get it down to 2%.
Yeah. Okay.
Right. And even in December, it's going to only be 4%.
Okay.
So they could keep talking tough like that. Mm-hmm. But as I just showed you, the market continues higher even as they raise rates.
No, I totally agree. But I just want to play this June 10th out, right? Because I think the setup right now is for inflation to have peaked, validation, and thus we might spring higher. I think if the other way, I think really shakes confidence. We go lower, but your point is still valid, right? That lower will unravel over a couple of weeks. A new floor or support will be put in.
Right.
And eventually the market will adjust and we will build from there. Is kind of your point.
That's right. That's right. Exactly. In general, like we talked about before, the market likes to go higher. Over the long term, the market goes higher.
What is the support below 38.50? Let's just play it out.
All right, so let's take a look at this chart. This one goes back to 2009, which is when this rally began. Okay. And there's a channel for this rally with the highs at the top up here and the lows being the low in 2009 and the low of COVID.
Okay.
But the market in general goes back to this dotted line, which is the middle of that channel.
Okay.
And you can see how many times it's going to come back to the middle. Yeah. Reversion to the mean before it bounced higher again. Okay. We're not there yet. In fact, from 3,800, we had 10% left to go, but we've all actually gone higher since then.
Yeah.
So from where we are right now, it's 16%. And if we get up to, in this rally, if we get up to 44, which we could, that's another 20% down if it goes back to this middle line.
Okay.
So if we get the rally the next 2 weeks till before June 10th, June 10th comes in lower or higher, inflation comes in higher.
Yeah.
Right. The market then starts to sell off, and we could go back to this center line right here, which right now is at about 3,600.
Okay.
And it will continue to climb slightly. So 36, 3,700, 37 is what I've been saying could be the overshoot.
Okay.
Of that 3,850. But if we go all the way down here to this is the high just before COVID. This is the final line. This is the one where if we break this one, if we break the high before COVID at 3,400, we could go all the way back down here to 2,800.
That's what I'm looking for. So 3,400 is an important number. Again, this is not what you're calling. It's not what you think. It's not what you're preparing for, but it is still
that's the absolute worst case scenario.
3,400. Okay. I like it.
But the normal scenario,
right.
Normal correction, as you see all the way back to 2009,
yeah,
would be around 3,700.
I got you. No, I think this is perfect. This is what I was looking for.
Yeah.
Okay. Yeah. So again, what I'm hearing you say, again, not financial advice and all of that stuff, but just you talking to your friend, me. If inflation went higher, it got wacky, the Fed's tougher, we break, we start going down to 3,400. That's the time that my shopping list that you and I have been talking about, we start to nibble.
If we go to 3,400, you should be buying hand over fist.
Friend to friend. Yep. Okay.
Everything that, yeah. I mean,
yeah, just you and I.
Who knows? It could go to 2,800.
Right. Of course.
Who knows?
This is the investor guy, not the trader, right? I will never be a trader. You put on stuff for hours and days. I won't do that. I'm looking to build wealth long term. So it's back to the shopping list. Okay. I like it. Okay.
Now, I said in the previous video, might be controversial, but I said that once we make that, once we put that low in, and maybe we already have, maybe 3,850 was the low. Yep. But depending on June 10th, we might still come back down to 3,700.
Got it.
I don't think we're going to get to 34, but we could come down to 36, 37.
Okay.
Even maybe 35.
Well, let me ask you this crazy question. One of the things that we saw last week, I think it was last week, we had our first negative pre-announcement.
Yeah.
Snap specifically.
Right.
One thing that is funny, I talked the day before with another Wall Street guy. I actually said we haven't had pre-announcement season. It's been a decade since we've had rolling pre-announcements. What if we got a pre-announcement from like Apple, for example, right? One of the bellwethers, one of the FANG names. They've had a tough time in China, right? It wouldn't be out of the realm of possibilities. And maybe it's not Apple, maybe it's Google, maybe it's just one of these other big names. What if we got one of those names that came out and pre-announced that, our expectations from 30 days ago are not valid? I think that would be not good.
That will absolutely affect the stock market, because stock market is based on earnings.
Exactly.
Right. It's all based on earnings. So yes, that will cause a major sell-off in that industry or that category.
Yeah.
And if multiple companies pre-announce like that. Now, Target and Walmart didn't do so good. But then we had retail companies last week like Macy's that did great.
Yep, we did.
So, the pre-announcements may cause a sell-off, but it might be short-lived.
Okay.
However, you can't ignore that. That's important because the stock market's based on earnings.
Yeah,
so
it's earnings and a PE. So
right.
I don't think it's out of the realm of possibility. Again, I said it a week ago before it happened, and I'm going to say it again. I think the next 90 days, we will have multiple pre-announcements. Now, I'm not calling Apple. That was just an example for everyone to kind of get their head around. It probably won't be one of the bellwethers, but I don't think Snap's going to be the last negative pre-announcement.
I agree. I think there'll be more. Yeah. And that could cause a sell-off. And interestingly, we actually rallied, except for the internet stocks,
right?
Except for the
communications or whatever.
Communication, yeah.
Their
the
basket is.
the XLC.
Yep.
Yeah, that hurt those like Facebook and
Yeah,
some of the other
Meta
ones.
and
Yeah.
Twitter and yeah. all
Right.
those guys.
Yeah, it hurt all of
Pinterest.
those. So the pre-announcements will hurt the individual industry that particular company is in.
Mhm.
But
Yeah.
again,
So
I think
for
it will be
me,
short-lived.
a pre-announcement whacks because stocks to me has always been company risk, pre-announcement whacks snap 50% or 48%. Then it whacks the vertical or industry, right? Everybody went
Yeah.
down in communication. And then
Right.
some companies, a la Apple, a la Tesla, a la Google, if they pre-announce, that is market risk,
Yeah,
in my opinion.
that's right.
Okay.
That's right, because those are the ones that drive the NASDAQ 100 as well as the S&P. They make up 35% of the S&P.
Exactly.
S&P is a weighted index.
Yeah. Well,
It's not equal weighted, meaning all the stocks in its index get the same weighting.
Mhm.
It is a weighted index. So
Mhm.
the big ones get a bigger weighting. So if they go down, then the market goes down more.
Absolutely. Well, do me a favor. I don't know if you have it ready. If you don't, it's totally cool. But let's take a look at Kathy Wood because I think she had a pretty good Friday.
Oh, okay. Let's see. Huh. What? Well, interestingly,
Your names are not there.
yeah, here we go. My portfolios.
There we go. All right.
Here it is. Down 26% still.
But she did have a good day.
She had 4 up ones.
Oh, that all. Oh, is that up for the day or up?
Now this is up since the beginning.
I gotcha.
Yeah, since the beginning. So Signify Health is basically the only one that has always been up.
Yeah. Okay.
There was a point where everything was down except for that one.
Yeah, I forget. Something just overtook Tesla as number one in a position. I think it was Roku. I think. Where is that?
Could be.
I think it was Roku.
Roku's here.
Yeah. All right.
Roku is still down 15%. This is since
since the day.
February 18th. This is when we put this together on February 18th.
Yeah, that's fine.
So since February, it's still down 26%
for the portfolio.
But it was up 7% for the day.
Yeah, that's what I wanted. Good job, Kathy. You got 7% in a day. That's a hell of a move.
And back to this and my controversial call that once we get through this little period of decline, and again, we might still get down to 3,600. But once we're done with that, I think the end of the year is going to be a huge rally.
Okay.
And we may actually get back up to the highs up here.
Yeah,
4,800, even above that to 5,000.
Yeah. So I haven't heard anybody else talk about this. This is not financial advice. This is two crazy guys talking into a microphone on YouTube. But yeah, it's going to be fun to see because these are all shared or all saved. So.
Yep. This is just a couple of other charts I had ready here. This was something interesting that I noticed last week, even though I didn't do anything in the market because I was on vacation, on the road mostly. But one thing I noticed, this big decline the week before last.
Yep.
See that red box around it?
Yeah.
Big decline. This is the VIX underneath it.
Ah.
It went down lower than the previous low.
Yeah.
But the VIX did not come up higher than the previous high.
Yeah, a lot of people are talking about the VIX. It never had that washout 40-day, whatever they call it, percent day. Right.
Yeah. In fact, it was counterintuitive. Usually the VIX goes up when the market goes down. When the market hits a new low from the previous low, the VIX should be hitting a new high.
So let me just ask you a crazy question. Wasn't planning to go here. Is this an example of maybe Main Street or the retail investors being less active, and this might be the big boys jumping in, thus less churn?
I think that could be part of it, but frankly, I don't think the retail investors have much impact on the market. There's not enough of them.
Okay.
To have enough impact.
All right.
But the big hedge funds and mutual funds definitely do.
Okay.
So to me, what this means is they are accumulating.
Yeah, that means
declines.
So 3850 was the real number. Again, you told us that 3 months ago. This is a number everybody has in their charts. Everybody's looking at it. This is not a surprise to anybody.
Yeah.
Okay.
And they've got their algorithms set for it.
Yeah.
So if we get down here 3850, start buying.
Yeah. So they got an 8%,
So
I don't know what that is, 8% pop in 2 weeks.
yeah, so that could be validation of that theory. Here's the VIX itself. This is my favorite VIX chart.
Okay.
You can see right here, the VIX this is the gray area started coming down. This is a 5-day moving average, the red one.
Yep.
And a 21-day moving average is the green one.
All right. So gray is a day.
The gray is 1 day. So
I got it. Okay. Got it.
all of this is 1 day.
Got it.
So if this is up and the market's down, here's the market below it. But as the gray one falls below the red one, the 5-day, and the red one falls below the green one, 21-day, which happened right over here, then the market starts going up.
Got it. Man.
So it kind of validates again that we are in a rally, and the rally could continue for a couple of weeks. This is the relative chart of the discretionary versus staples. So this is the consumer. And we can see relative charts are based on discretionary versus staples. So if it's going up, that means discretionary is outperforming. If it's going down, that means staples is outperforming. And you can see it's just starting to turn up, but it really hasn't crossed yet.
Yeah.
So consumer discretionary is starting to come back, but the consumer in general, because staples are too, both discretionary and staples are starting to come back. So the consumer is starting to re-engage. And then we can do the same thing for technology. So here's the technology. You can see right here, it actually crossed over here. Gave us a preliminary that technology and growth stocks might be starting to come back up again. And then it hasn't quite crossed again yet, but this could cross on Tuesday if we get an up day.
Got it.
And then you can see down here, this is the XLK with a moving average. The technology stocks are beginning to outperform their moving average. Again, that means that the big hedge funds and mutual funds are starting to nibble at growth stocks again. Starting to position their portfolios, because they can't take a position in 1 day or even 1 week. It takes them weeks and months to take a position.
Okay.
This is growth versus value. So again, if it's going down, that means value is outperforming growth. If it's going up, that means growth stocks are outperforming value. You can see the Russell 2000 starting to move back up. That's the black line here. Russell 2000 starting to move back up. The pink one hasn't crossed the blue one yet, but it's starting to move back up. So this is another one to watch. It crossed over its moving average, just like the technology stocks. So growth stocks may be starting to come back in light for the big institutions.
Yeah, this is fascinating for me to learn. Again, something on my channel is about now is building wealth. I'm getting a shopping list ready. June 10th is a big day. June 10th
is going to determine what happens even to the end of the year.
Yeah, I think so.
So if we get a lower inflation number, the market's going to take off. If we get pre-announcements, the market may pull back, but I think it'll be in particular industries and it will be temporary.
Yep.
And I think that we will hit a new high by the end of the year. I think we're going to have a massive rally in Q4.
Fun to think about. Not financial advice, two crazy guys talking on YouTube, but do the work. Get his newsletter, read his newsletter. I consumed it yesterday while I was having lunch. It was amazing.
Yeah, here's the information. If you're interested, it's free. breakpointtrading@gmail.com. Send me a note. I'll add you to the list. I do it every week for myself anyway, so no charge for it.
Thank you very much, buddy. You have a wonderful week. I can't wait to catch up next Sunday. Next Sunday is going to be fun. We're just be a couple of days away from June 10th.
Next Sunday will be a week away. The June 10th is on a Friday.
Wow.
And by the way, this coming Friday is the jobs number. So that's going to be interesting to watch as well.
Yeah. So jobs number, I think the expectation I read was 325, or you got the over or the under?
I think it's going to be a little under.
Yeah, I got the over. Okay. That's cool.
I think it's going to be a little under, but not significantly under.
Yeah.
And if anything over 200,000 will still be good, still be okay.
Okay.
Like we talked about before, that the jobs rate usually is at its lowest point before a recession.
Yeah, exactly.
And maybe next week we'll talk about the recession, or if there's going to be one.
Sounds good. I look forward to it, man. Take care of yourself. Enjoy the week. Thank you for all your help.
You too. Take care.
Bye. Wrong button.